All right. Well, good morning and welcome to our Federal Policy Spotlight on the National Flood Insurance Program, brought to you and us by our friends and partners at the National Association of Counties. I want to welcome back Erin Hurley, NACo's Director of Government Affairs. She was with us last week, and making a first-time appearance is Brett Mattson, the Legislative Director for Public Justice and Public Safety, and he also staffs the Gulf States Counties Caucus, and we thank him for that work as well. So, Erin, Brett, I sent you guys some bullets, some things that we could talk about. I know a lot of things are in limbo in Washington right now, as you know, as Erin talked to us about last Thursday, and as we watch on the news every day, we can see things are in limbo. But I think there are some peripheral issues that may not be tied to the budget, and maybe we can talk about that. But specifically, we want to talk about the upcoming expiration again of the National Flood Insurance Program. So with that, Brett, I'm going to turn it over. Well, you let me know who, Erin or Brett, who's going to start?
It's all Brett.
Okay.
For better or for worse. Yeah. So as Eric mentioned, you know, we're here to kind of chat about the National Flood Insurance Program. Just some kind of like high level overview of NFIP. So NFIP was originally created back in 1968, so been around for a little while under the National Flood Insurance Act. And really the main goals were sort of twofold, which is reduce the impact of flooding on private and public properties, but then also encourage communities to adopt floodplain management regulations. And so, you know, certainly has had its ups and downs, I would say, along the way. But one of the sort of interesting things that you'll see on the screen there that the Government Accountability Office just recently released is this interactive dashboard and map that counties can actually go in and see, you know, not just the number of folks that have NFIP policies in their jurisdictions, but also what their full risk rate is, what their medium full risk premium is, and a number of different other kind of factors. So would certainly encourage you all to kind of peruse that. I've included just a screenshot there of Florida in particular, and you can kind of get a sense of really where NFIP for the most part had seen big uptake, which is the coastal communities and in particular the Gulf Coast communities. But so I've included a link there that I would certainly encourage you all to kind of go in and peruse to see what is happening in your respective jurisdictions as it relates to NFIP uptake, but then also, you know, what some of the impacts of these previous federal legislative opportunities or challenges, frankly, for that matter, have impacted in terms of rates and things like that. So just kind of diving into those legislative efforts. Really, the most recent one that folks probably remember is the Biggert Waters Flood Insurance Reform Act. This was passed back in 2012 and actually just lapsed in 2017, which I know seems somewhat recent, but is quite a ways back now. So we're going to kind of look at Biggert Waters in sort of two buckets: the what was it supposed to do, and then what did it actually do. So again, this is the most recent 5-year reauthorization of NFIP, which certainly it did accomplish, for better or for worse. What its kind of main goal was to try to make NFIP solvent. At the time, the program was facing a $24 billion deficit. And then the other kind of big piece was to reevaluate the methodology for calculating annual premiums based on risk and what they were called better reflected expected losses. So certainly some big aspirations there. And what we have seen since the enactment of this bill is a lot of negative impacts, candidly. So what it did once it was actually implemented and on the ground was that it eliminated policies that were priced at what they deemed as pre-firm subsidized, but then also any program or any policies that should have been grandfathered in. And so we saw pretty dramatic premium rate increases for homeowners and businesses. And then they also updated, as a result of Biggert Waters, the flood insurance rate maps or firms, which basically included a whole new section of low-lying areas that, again, experienced really high and dramatic rate increases. So as a result of this, again, this passed in 2012. So in 2014, Congress kind of started to hear from a lot of you all probably about what these impacts were and how they were negatively impacting a vast majority of our residents across the country. And so they passed a bill that was the Homeowner Flood Insurance Affordability Act. And what it was really trying to do is address some of those concerns that popped up as a result of Biggert Waters passing. So the kind of three main pieces was it then allowed for grandfathering of properties that were built to the code prior to the release of those updated firms. It did provide retroactive refunds to NFIP policyholders if they had paid higher premiums after Biggert Waters was enacted. And then the last piece was that it removed the sort of sales trigger that they had included that basically required fully actualized premium rates at the point of sale for properties that were added to those new flood zones that came out as a result of Biggert Waters. So some really unintended consequences as a result of Biggert Waters. But as you'll see, and we'll kind of chat about the kind of lingering effects of Biggert Waters, and a lot of the sort of unintended consequences have left a bad taste in many of the folks up here on Capitol Hill. And it's largely why NFIP, since that last long-term reauthorization in 2012, and that it lapsed in 2017, it is currently operated under about 25 short-term extensions since that last long-term reauthorization ended. This, for what we can tell, is because of those unintended consequences of Biggert Waters. A lot of folks are really hesitant to take up a long-term reauthorization just because of how poorly Biggert Waters actually ended up being for a lot of local communities. So it's kind of served as this redheaded stepchild, for lack of a better term, that folks will kind of talk about but don't want to actually do anything about because they know that the last time they tried to do something, it didn't go particularly well. So there's a lot of consternation about doing a long-term reauthorization again. That's not to say there haven't been opportunities, and we'll talk about one of those here in a minute, but and NACo has certainly been pushing for a long-term reauthorization. But back in 2017, so right after the Biggert Waters reauthorization ended, the federal government did provide a $16 billion debt cancellation for NFIP because of Hurricanes Harvey, Irma, and Maria, essentially to ensure that the program could pay for all those claims that came as a result of those storms. However, still to this day, the program is about $20.5 billion in debt, and it's largely operated in a debt ever since its inception. So what we're working on at NACo, and that is particularly of interest, I'm sure, to you all, is, again, that long-term reauthorization. And so there's one bill in Congress right now that we're particularly focused on, as it's sort of the North Star in terms of a 5-year reauthorization, and that's the NFIP RE-Act, National Flood Insurance Program Reauthorization Act, for the long-winded version. And that's S2142 and HR 4349, bipartisan, bicameral. Again, 5-year reauthorization. One of the big cornerstones of this, and that we'll dive into here in a second, is that it caps premium rate increases at 9%. Currently, under existing law, they're capped at 18%, but those can actually compound annually under this new risk rating 2.0 that we'll talk about. And as a result, folks could experience up to 36% increase in their premium rates by year 2. So this would cap those premium rate increases at 9%. Certainly not ideal, but that's a big windfall from the 18% that currently exists. Additionally, it has some affordability provisions for low and middle income policyholders, which is, in NACo's view, a big win to ensure that those folks have access and can maintain relatively affordable rates for having NFIP policies. And then, like I mentioned, and we'll dig into here, is it has some increased transparency provisions on FEMA's new risk rating 2.0 methodology that they just rolled out last year, and has caused a lot of pushback and consternation from a number of counties and parishes across the country. And so with the QR code that you see on your screen there is a QR code that will take you to NACo's policy brief on NFIP, and particularly asking Congress to pass the NFIP REACT. So I would encourage you all to take a look at that and reach out to your members of Congress if they have not signed on as co-sponsors to those that House and Senate bill. So on risk rating 2.0, this really represents the largest overhaul of NFIP rates in just about 40 years. So there's estimated to be about a 77% of all policyholders that will receive an increase in year one. We've seen that pretty much stay true across the country, and we'd be happy to pass along some more specific information about how those policy premiums have increased in different states. NACo is part of a group called the Coalition for Sustainable Flood Insurance, who has done a number of great reports and analyses of the impact of risk rating 2.0 and have some charts and graphs that I'd be happy to share afterwards that really emphasize the impacts of risk rating 2.0. A CRS report expects that about 50% of the policies currently under NFIP will be at full risk rate within 5 years, and that 90% will be at full risk rate within 10 years. One of the problems that we're having with FEMA right now is that there has been, and why we're excited to see it included in the NFIP REACT, there's been quite a lack of transparency on the rollout of risk rating 2.0 and what those actual long-term implications are on premium rates. So we are really hoping and imploring FEMA to give us additional data that shows what those rates will be past year one and year two, because there's a lot of concern that folks won't know what those premium rate increases might be come year 3 through 5 or 5 through 10. A couple of other pieces that we're expecting to see here. Again, risk rating 2.0 is still relatively new. We're just kind of starting to feel some of the impacts of it. But there's certainly going to be some affordability challenges for homeowners on limited incomes. Again, why we're excited that in NFIP RE, there is some affordability provisions for those low and moderate income individuals. Also, just general difficulty selling homes with those high premium rates. That's going to be quite the difficulty for some of these folks to ensure that they're able to sell homes if those premium rates are extremely high. And then the last one that we have certainly already seen an impact in a number of states is drops in coverage as a result of these increased premiums and essentially leaving homes unprotected and homeowners out of the program just because they can't afford their premium increase or their premiums every year. So their new calculation, and again, some of this methodology is still yet to be discovered on our end, and something that we're trying to get some more insights into. But there's a host of factors that FEMA says is included in how they've actually calculated these new premium rates, and as a result, the risk rate of these different policies. First being distance to coast and any other sort of flooding source, construction type, foundation type, cost to rebuild, levee quality. Although there's also been some concerns about whether or how those levees are actually being deemed as quality or not quality, and folks that might be in their mind protected by a levee, but are also seeing increased premium rates because FEMA doesn't believe that those levees are up to their standard. Drainage area, and then concentration risk. So those are just a few of the factors that we have heard from FEMA as being, rationale as to why folks' premiums might be at the rate that they're at. Again, we're still working to just kind of figure out and glean from FEMA what and how they got to a lot of these numbers. They've been really close hold on much of this information, which is concerning to us. And there's multiple pieces of legislation out there that are specifically calling on FEMA to increase transparency, but also either pause premium rate increases until FEMA releases a lot of that methodology, things like that. So We're not the only ones that are concerned about this. Congress has certainly taken a bite at this apple to try to figure out why these rates are increasing so dramatically in a lot of places. But that's kind of just a general overview of risk rating 2.0 and kind of NFIP as a whole and sort of where we stand. Don't want to take up too much time because I want to be sure that we have time for questions and things like that. So Eric, I will actually just stop here and then turn it back to you, see if there's questions or things like that. But just really appreciate the opportunity and happy to chat more about some of these issues. So
you would think by now we know how to unmute ourselves. That was awesome. And if anybody has questions, you can just put them in the Q&A or the chat. But can you go back to your slide, the last slide on risk rating? So my understanding of risk rating 2.0, what hasn't changed is the mapping. All right. So you still have a special flood hazard map that FEMA updates from time to time in my community. In the past, they would use that map on a I would just say kind of a community-wide basis to set the rate. So everyone basically has kind of the same rate if I'm in a special flood hazard area or a flood zone. But as I understand with risk rating 2.0, and as you've shown on the slide, I could have my house, let's say I'm on a house, someone is located 2 miles away from me, or maybe even a mile, but they're in my neighborhood. We're both in a special flood hazard area. So we're both in that same map shaded area, but I might be paying a higher premium than my neighbor who is still in that flood zone because of something, right? Because of I might be distanced to a creek, or I don't know why construction type would matter, because you're only going to be covered for so much.
Right.
I'm sorry, cost to rebuild, construction type. But is that do I get that right? Is that basically how it operates today?
Yeah, no, and that's one of the biggest problems that we've heard is, folks are not paying the same as what even like their next door neighbor is paying, and they're paying higher rates than, someone that's down the street, but they're still in that flood map zone. And so, kind of the broader issue with those flood maps too is a lot of them are pretty horribly out of date across the country. And so it's also putting folks either in a zone that they shouldn't be in, or not in a zone that they might be in. So really figuring out what their actual risk is, because those maps are so out of date in a lot of places, because they only have to technically update them every 5 years. But that certainly is not actually what they do. And a lot of these haven't been updated in well past that 5-year mark. It really is concerning to us because folks don't actually know what their risk is, and they might not even know if they're in a flood zone. So there's concerns with just the maps generally, but you're absolutely right. There's a bigger kind of swath of people that we've heard from that they're saying, I'm paying 150% higher in premiums, but then Joe Smith down the street is not seeing that. And so how do we get to this point? Because you would think it's kind of close in terms of what their distance to or what their construction type is. There's probably not too much differentiation there between houses in the sort of same neighborhood. But that's why we're really hoping to get some additional information from FEMA about how they have actually calculated these risks for individual policyholders.
And so isn't there a House Oversight Committee that is asking for more detailed information from FEMA, and FEMA hasn't, I guess, come forward with it yet?
Yep, absolutely. So there's been a couple of committee hearings, both on the House and Senate side, about the impacts of risk rating 2.0 and calling on FEMA to provide information. At least in one case, they invited FEMA to testify, and FEMA just straight up told them no for what they deemed as legitimate purposes. But it's kind of wild that they couldn't send someone. So yes, there has been many opportunities and calls from Congress to provide additional information. I know a host of particularly Gulf states, members of Congress that have sent letters to FEMA. Concerningly, at one point, I know some of our folks from Louisiana, while they were in town with their members of Congress, requested a meeting with FEMA, and FEMA again told them no to talk about risk rating 2.0. So there's been, quite the litany of examples of FEMA sort of just turning a blind eye to our requests, but also congressional requests, which again is very concerning on our end.
Okay, and then right above the calculation factors that you got in your slide, it said the CRS report, 50% of the policies will be at full risk rate at 5 years and then 90% after 10 years. But you also said that homeowners don't have a sense for what they're going to be paying next year, the third year, the fourth year, the fifth year. How did CRS figure this out?
Yeah, so from my understanding, and in looking at the report, it looks like they just made some educated guesses, perhaps is the best way to phrase it, based off of what they saw in the first year information that they received. So I'm sure that will get updated if and when more information comes out. But that's what I gleaned from it, is they look to have just kind of made some inferences about what the future could hold based off of what that first year increase was for a lot of people.
All right, can we just talk about, I guess, go back to talk about the actual legislation that you mentioned that NACo was supporting? I know there's several bills out there, but you said this was the North Star. So I guess there's a couple of things in play. One is the long-term reauthorization. That's important. The premium caps at 9%. I know we've seen that number before in some other bills. The affordability provision. So FEMA was directed to do an affordability framework, I think, a couple of years ago, and I think they issued that in 2017 or 2018. But did FEMA have the authority to do anything after that in terms of implementation?
That's a great question, and I candidly am not totally sure. But I could certainly find out. If my just kind of 2 cents is, if this is something that they're including in at least one, if not multiple pieces of legislation. I would imagine FEMA has not actually done much in that space, and so this is sort of forcing their hand to make sure that there is those necessary requirements or provisions for low and middle income folks. But I don't know the exact answer to that off the top of my head, but I can certainly figure that out for you.
But the legislation provides some sort of a discount or
subsidy?
So
it's like a voucher, basically.
Okay.
Is how they have it set up, that those folks would receive, either a level or a slightly discounted rate based off of what their income is.
And then what about, and you don't have to get into too deep of the details, but is it your sense that the legislation in terms of, you say heightened transparency on FEMA's new risk rating 2.0, transparency is great, but are they directing them to do anything different in terms of calculating, or is it just like, tell us the data, the models that you're using?
So how it's written right now is focused on the data and the models. What we've run into is a lot of Democratic offices have said that they trying to make reforms to risk rating 2.0 right now is a non-starter. So for our purposes, and that's their prerogative, but if we want to get something done, this is sort of the route that we have to go, is asking for how they got these models, and what those past year one or year two rates are going to look like. So just to garner Democratic support, reforming risk rating 2.0 within these pieces of legislation has not really garnered much bipartisan support. And so to get just about anything done in this space, we kind of had to walk that back a little bit and call for just transparency and seeing where and how they got to these numbers. And
then one other question before I'm going to ask Eddie just to talk about the lawsuit on risk rating 2.0, but I looked at 2142 yesterday. There's the issue of increased cost of compliance, and I know this was in one of the bill sponsors' press releases. And so when I got into the bill, it's hard to, when I look at federal legislation, it's very kind of hard to piece the things together if you don't have the original law in front of you. But there was a number of, I think the number was 140,000 or 120,000. I didn't know the context of that number. The increased cost of compliance that FEMA provides today is up to $30,000 if if you're substantially damaged and you need to elevate your home or comply with the local floodplain management ordinance. Do you know what the increased cost of compliance would be? Is what I'm trying to figure out what that number was that I was looking at.
Yeah, I'll have to go back and look at the exact number that they had included in there, but they do want to see that number pretty dramatically increased so that folks do have that additional flexibility. I don't know the number right off the top of my head though, Eric, but I can certainly get that for you.
Okay, great. All right, so I'm going to introduce Eddie Labrador. He is our legislative counsel, and he's been tracking the risk rating 2.0 lawsuit that is over in Louisiana. So Eddie.
Thanks, Eric. Just to provide a short summary of what's been going on with the lawsuit that was filed by the state of Louisiana and Florida and some 8 other states, along with over 60 local governments, primarily from the state of Louisiana. This lawsuit was filed on June 1st of this year. It was filed against the U.S. Department of Homeland Security, the Federal Emergency Management Agency, FEMA, the Federal Insurance and the Federal Insurance and Mitigation Administration. It's a 9-count complaint. It raises a number of claims, including that the NFIP's rates have to be consistent with the objective of the program, and it has to be available at reasonable rates. The complaint also claims that FEMA failed to take into account skyrocketing costs generated by new policies and mass withdrawals and the effects of those withdrawals. Also that FEMA rate calculations completely ignore their certain crucial factors like the effect on levees and the likelihood of flood damage. The lawsuit claims that risk rating 2.0 was published and implemented without notice or comment in violation of federal law, that FEMA did not consider homeowners' reliance on grandfathered NFIP policies or requirements of those who had previously accepted disaster assistance, SBA loans, or other forms of assistance, and also that FEMA had failed to consider the reliance interests of communities who had adopted ordinances and regulation in exchange for participation in the NFIP. There are also some other claims that are made in the complaint. This is a 146-page complaint. So the other claims is that the NFIP and its risk rating 2.0 system is arbitrary and capricious. It violates the Administrative Procedures Act. It exceeds FEMA's statutory authority. It's unconstitutional and are basically contrary to law. The case currently is assigned to U.S. District Judge Daryl James Papillon. It's in the Eastern District of Louisiana. Basically, in terms of an update as to where the case stands right now, you have on June 14th, the plaintiffs filed a motion seeking a preliminary injunction against FEMA's actions and also to stop the risk rating 2.0 from being further implemented. Also, in August, there was a motion to dismiss that was filed by the federal government, and that all of these motions have now been fully briefed. There was actually on September 14th, there was actually a motion hearing held by Judge Papillon which heard arguments from both the federal government on their motion to dismiss and also from the plaintiffs with regards to the motion for preliminary injunction. As of right now, where things stand, the court has taken those motions and the arguments that were made into advisement. That means that the court will get around to ruling when it gets around to ruling, and no ruling has been made on either one of these motions. So that's where we stand with the case, and with the which is basically early on. It's just at the beginning stages, and nothing more is available currently. So we're just waiting on the court to rule on the motions, and once those motions are ruled on, then I'm sure they'll start discovery, and the case will move along a lot at a faster pace. But right now, that's where we are.
Okay, thank you, Eddie. There was a reauthorization bill that was brought onto the Senate floor by Senator Kennedy out of Louisiana, but what happened? It didn't. Was there a procedure that stopped it from going forward?
I believe they just voted down the motion to consider it.
Okay.
But I will have to go back and look. I did see that as well. But that was just a straight reauthorization. And I believe it was for just a 1-year full reauthorization and no changes or reforms or anything. So, for our purposes, that wouldn't have really done us a whole lot of good. Anyways, it'd be great just for, the fact that it might not lapse, but I will say to Congress's credit, they haven't let it lapse. And it usually just attaches to a CR or the omnibus. But yeah, I believe they had just voted down the motion to actually consider it.
Okay.
So, and then on the ICC piece, Eric, I looked it up just really quick, and it's 120,000 is what the change would be.
So you could get up to $120,000.
Correct. Yeah.
Wow.
So,
okay.
Yeah.
Hi, Eddie.
I've got a question for Brett, and that is, the legislation has been filed that I noted that NACo is supporting. I think in the Senate, it was filed by Senator Bob Menendez. How does the issue with the senator right now, how does that impact?
Great question, and has already sort of reared its ugly head, as yesterday, actually, there was supposed to be a hearing in Senate Banking, the subcommittee that Senator Menendez chairs, that oversees NFIP, and because he was at his hearing, he was not able to oversee that, and so they had to postpone the hearing on NFIP. We don't have a full picture yet of how that impacts it, but I would say just from a outside standpoint, it certainly has an impact. There is a couple of other Democrat senators on there that could likely take the mantle from him if need be. I think there's like 3 or 4 other Democrats on that bill. I'd have to go back and look at exactly how many. But he unfortunately has been our champion on this on the Democratic side. So we'll kind of have to wait to see how it plays out. But there has already been at least some impact in terms of what Congress is doing around this because of what he's going through. So.
Yeah, Eddie, I think Senator Rubio is a co-sponsor. I don't know what that does. And he had legislation filed in, I think, 2022, which we were supportive of. All right. So, Brett, can you look into the crystal ball for us? And, the budget deadline notwithstanding, can they, what can happen? Can this be extended without getting tangled up into that discussion?
Yeah. So in at least in the 2 CRs that are sort of going around right now that I've seen, the Senate bipartisan one that just came out, and then also the one in the House is kind of floated. There is an extension of NFIP to whatever that date is in there. So they likely won't let it lapse unless there is a government shutdown, knock on wood, but that sort of seems where we're heading. So to my knowledge, unless they pass that CR, it will have like a short-term lapse, but typically there hasn't been too much of an impact as a result of that. I think long term, in talking with particularly Senator Cassidy's office, who is the lead Republican on that NFIP re-bill, they're not super optimistic about it passing this Congress, I will say, because Senator Scott, although he is running for president, he's the new ranking member on Senate banking. Previously, it was Senator Toomey from Pennsylvania. So the fact that we have a ranking member who's from a coastal jurisdiction does give them some optimism in terms of the possible viability of getting at least a markup done in Senate banking, although Senate banking hasn't been particularly keen on doing many markups this year. So all that to say, it's a little bit murky, and I wouldn't say we're too optimistic, but at a minimum, it won't lapse for longer than whatever that potential short-term government shutdown would be. They've done, to their credit, again, a pretty good job of making sure that it's actually extended and does not lapse, and they just attach it to an omnibus and things like that. So.
All right. Well, so the last question is Florida has about 1.7 million policies from NFIP. It's more than any other state in the country. So is there a message that you want to give out to Florida counties on NFIP, whether it's short term, long term?
Yeah, I mean, I think the ask is really to just keep beating the drum on that long-term reauthorization bill. While it's great that they don't let it lapse, there is always that possibility, if and what, just depending on what the circumstances are. So that 5-year reauthorization for us is really critical. This has been, one of, if not the top priorities for the committee that I oversee, but I think just NACo as a whole in sort of the disaster space. And we've, like I've said, we've seen a lot of folks kind of drop out already of NFIP because of risk rating 2.0. So again, that long-term reauthorization is really critical for ensuring that our residents have the affordable policies that they need to make sure that they can rebuild after a disaster. So would certainly encourage you all, and we've done a number of letters that I'm happy to send along that folks can kind of just pick and choose from and put their county seal on supporting NFIP re. And then, I would also encourage you all, if the opportunity arises where you have conversations with your respective FEMA region or any FEMA representatives to just kind of keep picking at the risk rating 2.0 piece of it and kind of see what their responses are. And if the chance comes that they're able to or willing to share more information, I think that's kind of the other kind of big piece out there. So just keep beating the drum on NFIP re, and we'll continue to work with you all to make sure that the correct folks are getting the information that they need here on Capitol Hill and at the headquarters for FEMA here. So.
All right, we will absolutely do that. We have our federal chair that's participating on this call. So again, Brett, thank you so much for the information. Aaron, thank you also for participating. And Mr. Labrador down in South Florida, your legal counsel is always appreciated. Thank you.
Thanks, everyone. Really appreciate it.
Thanks all.